Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have here is, briefly explain any three needs for preparing a bank reconciliation statement. Before going to the needs, we will know what is a bank reconciliation statement. It is basically a statement that reconciles the balance of the cash book of the business and the balance of the passbook of the business, that is the bank statement. So by definition, a bank reconciliation statement is a statement prepared to reconcile. To reconcile means to match the difference between the balances shown by the cash book, that is prepared by the business, and the passbook, that is bank statement, that is prepared by the bank on a given date. Again, the bank BR, or we can say BRS, is prepared on a particular date. So it reconciles the balances between the passbook and the cash book. These differences arise. Why do the differences arise? Due to timing and recording mismatches between the business and the bank, because these are prepared by two different parties, that is the cash book is prepared by the business and the passbook is prepared by the bank. That is why it is very natural to have certain mismatches, and that is mostly because of timing and recording mismatches. So what are the common causes of difference of the checkbook, the common causes of difference between the passbook and the cash book? These are checks issued but not yet presented for payment. So when the business issues a check, it will immediately record that in the cash book. However, if that is not presented for payment to someone or in the bank, that is not yet recorded by the bank in the passbook. What it does? It does timing and recording mismatch. So suppose a business on a particular date issues a check for payment, the business immediately will record it in their book that the check has been issued. But that is not presented. If that check is not presented for payment, the balance from the passbook of that bank will not be deducted. So that will not be recorded, and therefore there will be a difference between the passbook and the cash book of the business. And that to reconcile that difference, we prepare BRS. The next cause of difference is checks deposited but not yet credited by the bank. So checks have been deposited to the bank. So when check has been deposited by the business to the bank, the business will immediately record it in their books. However, if the bank does not credit that amount yet, the bank that does not record that the bank that does not record that amount yet because it did not credit. So there will be a difference in the passbook and the cash book. So this becomes another reason for mismatches. Next is bank charges or interest not recorded in the cash book due to certain maybe again bank charges, because it is charged by the bank. So the business might not know the amount of the bank charge or not know when the bank charges that amount. So that because the bank charges it itself, the business does not have that information, so the business does not record it in the cash book, and that becomes another reason for mismatch in the cash book and the passbook. Next is direct deposits or withdrawal by the bank. So in certain cases when the bank does direct deposit or withdrawals, then again the business or the accountant is not aware of that information or that transaction, and in that case the accountant does not record it in the cash book. So but that again that transaction is recorded in the passbook because the bank does it itself. So what does it do? There is a difference or there is a mismatch in the balance of the passbook and the cash book on that particular day. Again, the next reason here is errors in either the cash book or passbook. If there are certain errors either in the passbook or in the cash book, that will also lead to mismatches between both, that is the cash book and passbook. So these were the reasons why there are mismatches between a cash book and a passbook. Now we will move to the need of preparing a bank reconciliation statement. The first need here is to ensure accuracy of bank records. VRS helps verify that the balance shown in the cash book matches the passbook, ensuring both records are correct. As I said, it is prepared to reconcile, right? So again, I have also mentioned the reasons why there are mismatches in the balances. So again, why does a balance sheet is prepared? To reconcile the balances so that the balances are matched on a particular date, or they are compared with each other and match finally. And what does it do? It ensures accuracy of bank records. So because bank, again, so that there are different kind of transactions every day by the bank and by the business as well. So that if a bank makes one transaction, that has to be recorded in the VRS as well, so that there is accuracy of the bank records. The next need we have is to detect error and omissions. It identifies mistakes or missing entries in either the cash book or passbook, allowing timely corrections. Because again, while preparing a BRS or a bank reconciliation statement, we compare the balances of both the cash book and the passbook. So when there are mismatches, we will know that might be because of certain mistakes or missing entries as well. So what does it do? Preparing a bank reconciliation statement helps to detect errors and omissions. The next need here is to prevent fraud and delays. Regular reconciliation helps uncover unauthorized transactions or delays in check clearance and reducing the risk of fraud. So when an accountant regularly keeps on preparing BRS or a bank reconciliation statement, it prevents fraud and delays. So if there are certain unauthorized transactions happening or delay in transactions or check clearance, that comes into the radar or view of the accountant. And what does it do? It prevents fraud and delays. So these were the need for preparing a BRS. The first here is it ensures accuracy of bank records, because again it compares both the cash book balance and the passbook balance. The next need is to detect errors and omissions. Again, while comparing both the balances, errors and omissions are detected. And the last need here is to prevent fraud and delays. Preparing bank reconciliation statements timely or regularly helps to prevent fraud and delays.